Welcome to Markets Now. I'm Michelle with Darren Frye, Water Street Solutions. A lower day in the grains on Friday. We had cotton and cattle higher mixed in the hogs. And Darren, let's talk about the grain complex. Soybeans kind of drug everything down with it, removing some of this Brazilian weather premium.
Yeah, they sure did. We had a great week. We finished up higher in beans and meal for the week, but hit our highs midweek. And with the talk of the euro being so much wetter as we roll into the weekend and into the next 5-day period, starting Monday through Friday, a lot of those areas supposed to get 2 to 4 inches of rain, 85% coverage across a lot of that Mato Grosso, Goiás, Tocantins, into the Bahia and down into Minas Gerais. So that whole area is really soaked. And obviously, a lot of people had profits wanting to get out of some of those before the weekend. And so we saw profit taking not only on Thursday, but also to finish the day today.
Yeah, and we'd had a good run in the soybeans and especially the meal market after making new contract highs. So we were probably due for a little correction anyways, weren't we?
Yeah, we really were. Meal in about 28 sessions rallied over $100, and obviously we've seen beans go up about $1.30, $1.40 in that same time frame. And so there were strong moves in both these markets. So there was a little bit of profit taking as you look at what happened here to finish the week. No critical support levels were violated, so it'll all come down to weather when we start the new week next week.
What about this corn market? Did it just follow soybeans and wheat today? I mean, it doesn't necessarily have a bullish story on its own, does it?
It really doesn't without a better export book. We're starting to see a little bit of a rebound, a little bit of an uptick in exports. But I think the real key to that will be if the safrinha crop gets cut. And we know that there's been some acreage switch around down there. You hear a little bit about it out on Twitter. You read about it in people's commentary. But I think the biggest thing is how much acreage do we end up losing for safrinha, and then how late does that crop get planted? Puts it at more risk when you plant really after the middle of February. You get closer to the end of the monsoonal flow at the end of April, and that could really curb their yields in general and give us more export business. Safrinha crop is an exportable crop. They don't use much of it for domestic, if any, only if the first crop is short. And so anything that they lose on safrinha should help us on our export side almost one for one.
Yeah, but exports have been picking up. We had a really good week this week.
Yeah, we did. I mean, we were 31 million over what we needed on a weekly pace to hit the USDA number, and so I'm encouraged by that. But I think we need to see a lot more with the 2.1 billion carry out. There's nothing bullish there. We need to see that come down a little bit. Maybe the January port being trimmed, and a lot more exports coming our way.
So we did score a reversal on Monday in this corn market. Does it hold, do you think?
It's left to, I don't know. It's hard to say. We'll have to see, but time will tell. But it was a nice reversal. We had a 3-line strike on a Japanese candlestick chart. We had a double close key reversal outside barn combination on an open high-low close chart. And so I do think that is positive. But now we need to see the market get up and get out of here. And so far, it hasn't been able to do that. We've pulled back pretty good, and we need to see it support and move higher starting early next week.
And a down day on Friday in the wheat market. Kansas City wheat, well, we're back into contract low areas. How much lower do you think this market needs to go? And is this just all about demand?
Well, we had to engage our alternate, which is the bearish alternate, and we're looking down at least another 30 or 40 cents here in Kansas City. I haven't seen that in the Minneapolis or Chicago yet. We've been holding critical support. But it is about demand, and it's just about a larger crop. The last time we got that report, we were surprised at how much bigger the crop was, and we're still digesting and working through those bushels. But also about Russia. Russia has cheap wheat on the market, and even though Argentina's crop's being downgraded, Australia has a drought. We haven't seen those things really support us. So the path of least resistance is still lower, and that's where wheat is going until we see some type of a change or a massive turnaround in the market.
And Darren, we did have the cattle on feed report out on Friday, the on feed number at 102, the marketing's number at 97. Placements was the big one we were watching for at 104. That was actually a little bit below expectations. So slightly friendly, you think?
Yeah, I do. I mean, I think that was the big difference between last month and this month. We were looking for a small number, got 106. This month we were looking for 107, got 104. I think that'll help support the corrective rally I think is taking place, especially in the deferred contracts, your February, your April, June. They should be up as we start Monday, I would think.
And are you more bullish still long-term just because of this tight supply situation?
Well, you would think so. Fundamentally, we got to see how the counts lay out, but I don't know how long term we're going to fix the problem unless we start retaining heifers, and we know why placements have been up. We're putting our heifers into the feed yard, so we have to have more retention of those if we're ever going to fix the problem longer term. Otherwise, the herd is going to continue to shrink, and we have a longer term bull story there.
Economic, I guess, fears, demand fears are part of the reason that this crude oil market has been seeing some pressure. We were up today, but a really ugly day on Thursday, and we were down for the week. Are we in jeopardy of turning that market into a bear market, Darren, or not?
I think we are. Crude is really pressed really low into the previous move higher. And it's gotten so deep that you got to wonder if we aren't going down into new lows, down in that 55, 60 area. I know a lot of people don't think that with the conflict in the Middle East and all the reasons why we've, had the supply and demand side of the balance sheet tightening. But I don't know. I mean, what would hurt the most people probably is a move $20 lower. And that's kind of what markets try to do, is adversely affect the most people. And so I could see it. If we are going to keep the bullish case alive, we need to turn from today's low. We had a strong day today to close the week, but we need to see a lot more to the upside when we start next week.
All right. Thanks for joining us, Darren Frye, Water Street Solutions. That is Markets Now.